All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and the long-term trend has been broken. Yes, I'm not talking about the long term, but we have Powell tomorrow, but leading into all of this, even though today kind of seemed like some bullish relief, there is one thing we got to focus on, and a couple things are emerging ahead of Powell, and I got to bring your attention to it. So we're starting with the pretty picture. What I am talking about is the 10-year bond. Ladies and gentlemen, how many times have we brought this up? We've seen it throughout the year. Again, earlier this year, we tested 3.5 and then came right back down. This morning, we did the same thing, and now coming into Powell tomorrow or on Wednesday, literally it's at 3.5. So where we go from here is going to be crazy, but now, even in relation to that longer term trend, according to some research people, and I'm sure my technical people, you guys can verify this, but we are now on the longest streak of trading below the 200-day moving average since 2008 and 2000 through 2002. So Powell is Wednesday. Things are popping off. We got a little bit of relief. I got a little bit of breakdown for you. I think, don't get mad at me, we might get a little bit of a mini rally, and depending on what happens with Powell, we're going to find out. But here's another one. Ed Yardeni, president of Namesake. This guy nailed the bottom in 1982 and 2009. Boomer. I'm kidding. Okay. Anyways, but he sees the Fed boosting rates by 100 basis points this month. And then he also said that we could drop all the way back to the lows, but we're going to talk about all of it. It is going to be wild, ladies and gentlemen. This is really the main event for Wednesday, so I hope you're ready. I got the keys. Recap of today, the plays we made, what I'm looking at coming into all of it, and then what we can really expect. So drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. I still don't know what I'm pointing at, but we'll see you there. It's free 99 and we love you, and just bring a good vibe, and like, you better be there for I hope I see you there. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, like I said, we might have a mini rally in play all the way up to 39.60. And what I'm basing it off of is this right here. Here are the levels, but I just want you to see between 39.60 and this 390 or the 3900 flat. We actually spent most of the time last week in between that level, if you really think about it. Obviously, the Tuesday and CPI was crazy, but this is a very important level, and the fact that we closed right underneath it, the futures went a little higher. People are looking on this, but if there is going to be any upside, any sort of relief before Powell, this wouldn't be uncommon. I would just expect all the way up to 3960 if people are going to get extremely bullish. We're talking tomorrow as well as Wednesday leading into Powell. So that's where I'm going to start off with all of this. And the thing I'm hoping you could take away from this is that the market can still move into Powell. And I still think the market has the ability to stay up until acted upon by an equal or opposite Powell. So keep all of that in mind. But now coming into the second key here, the fact that we are at 3.5 on the 10-year, this is just highlighting something is about to go down. I'm not saying the market has to come down, but literally imagine the market last time we've hit 3.5 this year. We've been talking about it getting up to this level, and literally anytime the 10-year even dropped dramatically after topping out, just take a look at the chart, there was some big events. Again, even 2018, that taper tantrum, it actually required the 10-year hitting a multi-year high and then just vomiting and coming down. So hopefully hopefully you're seeing what I'm saying, but it's just like, no matter what the levels are, and just I want you to understand you're watching another one of these key metrics at a breaking point right before a key metric or a key event with Powell. So literally either Wednesday or even the next days after, again, we're still coming off expiration. This is saying something. And even today, we saw the 2-year and the 5-year bonds, they moved up big, 10-year not too much. And now this is going to get kind of into Powell and what to expect, and whether you're expecting upside or downside. I just want you to understand a couple of things. And yes, that bond at 3.5, that is important. And again, leading into Powell, rate hike expectations, anything with bonds or rates, you will watch it reflected somewhere throughout the bond curve. Again, 2-year, 5-year, and all of that is moving as well. But now this is what I want you to understand coming into Powell, watching the lead up and then even watching the bonds. 100 basis points, that should not happen here on Wednesday unless Powell wants to make a forceful message and do the J-hole pivot. A lot of people are talking about it lately. Again, Powell changed his speech right before Jackson Hole. Again, think about it. The market rallied like crazy. We saw it come down. So unless Powell really just wants to be an a-hole, unless he wants to send a message and really does not want the market to be this high, if he has to make that message and be forceful, then he's going to do 100. Otherwise, it should not happen this time around. Again, like Eddie Ardini, it's interesting to see. People are still debating it, but as of now, the Fed futures are on 75 basis points. That is fully priced in. But now, tying this into the second key, the 2-year and 5-year today, and even what you're seeing just all across the board, 10-year at 3.5, even though those rate hike odds coming into Wednesday aren't really moving, the rate hike odds past Wednesday, go on the Fed futures website, go to November, go to December, go even into next year. The rest of the curve is moving, and that is going to be the killer this week. That is what I'm trying to tell you. 100 basis points, that would be very, very bearish if that happened. Again, if Powell did it, it would be an apocalyptic 3 to 5% move, especially after seeing the CPI. That would be negative, but even without 100 basis points now, and we're going to talk about 75, but even without it, if the rate hike odds after Powell all the way across the curve, and we watch the 2-year, the 5-year, the 10-year keep making these volatile moves, that could be the thing that will lead the market lower. So keep all of that in mind. But coming into your final key in 75 basis points, a lot of people are asking then, well, if 100 is bad, does that make 75 good? No, 75 is not really bullish coming into this meeting. It is just not the worst thing. All that matters is how the market receives it, dependent upon how Powell decides to deliver it, whether it's going to be forceful, what language he focuses on, all of that stuff. And even then, how does the market receive it? Watch the whole bond curve. Again, TLT all the way down to shy. If the Fed futures beyond, if they start moving, if the 3-year goes beyond 3.5, again, next level would be 3.75. But point is, we have these things to watch. We'll see how the market takes it. At this point, 75 isn't bullish. I don't know if it's bearish. Like I said, I wouldn't be surprised to see an upside reaction to 75 or lower, and then we sell it off. But as of now, we just don't know, but it's just not the worst. And if you want the reasoning as to why I'm not confident that 75 would be bullish, simply 2 weeks ago, 75 was a negative scenario. Just remember, before Jackson Hole, even like right afterwards, people were expecting a pivot. The Fed futures were pricing in half a basis point for this meeting. Then it jumped to 75, but once it got sticky at 75, we started talking about 100, but a week and a half, 2 weeks ago, 75 was a bad case scenario. So that's where I'm saying I don't even know how to interpret it, or even then I kind of am still expecting a bearish reaction, but ultimately it is all up to Powell, and we're going to see what happens. So I hope you're ready, but let us get into the plays. So right off the bat, I got 3 different stocks that I'm looking at. I made a couple of plays, and even one thing I could highlight, a lot of the plays we brought up from yesterday's watch list, I would still keep eyeing those. I'm still keeping an eye on UNG and gas, the simple way with UNG, oil, gas, all of that. The closer we get to winter, the more bullish I'm going to be. But in the meantime, nobody nobody really knows, but you're going to get that volatility. But I've been saying it. I didn't make a play, but I'm going to be watching it like a hawk. Just keep an eye on those bank stocks, both before Powell and after Powell. I think they might be able to move a lot. But as far as the 3 plays, starting with number 1, Take Two. I made a trade on it. The Grand Theft Auto 6, they had a leak today. They opened down 6%. They bounced up to 2%, so I decided to short it there. I was around 121.87, but I only did 15 shares, not too much. I'm even down like 50 bucks on it, so it moved a couple dollars against me. They had a bounce, but they had the bad news, and the real reason why I played it, not only with the bad news, I thought it was going to continue down after being down pre-market and bouncing, but just look at the chart, man. It just looks like they want to get clapped. They're doing that pin there over the yearly, so they could either bounce a lot, but if anything gets worse, I'm like, all right, let's play some of it. But this one, probably going to flip out of it, but that was the major news this morning. Had a reaction. I would definitely keep an eye out for that, especially after watching even Roblo and a couple of other gaming stocks sell off, but watch them. That is play number 1. Play number 2, I made a short on Apple. I did 50 shares. I'm down like $3 a share on it. My cost basis got messed up a little bit. I made a fat finger, but I shorted 50 shares at 150, 187. When we get to the trades, it's going to show my open P&L a little different, or that I shorted it at a higher price, but had a fat finger there. But I decided to go with Apple. Simply, they've been outpacing. They've been showing signs of the safe haven, but they're a little bit or a lot more wounded than Tesla. Just remember, last week, Apple was doing the safe haven dance, and they really sold off. So I figured, hey, might as well go for it. And even at the time, I was dealing with some future stuff, and I was going to take a trade on the futures, but I noticed Apple was up 1%, while the SPX and the SPY were already in the red. So I said, all right, it's outpacing and go for it. And so I went with 50 shares, going to ride that one out towards the end of this week. May close it after Powell if it really does truly become bullish. Otherwise, I plan on riding some of the downside positions into all of this on Wednesday. But that is play number 2. And then finally, play number 3. Just keep your eyes out for this. And I really think it's interesting. Costco, Target, and Walmart, with an emphasis on Costco. Simply, they have earnings this week. Watch out for some of the earnings run up. Again, I know we're waiting for Powell and all of this, but earnings, premium, how that can move things, that could be interesting. But also, just look out for any trends with Costco. If we hear from any of these retailers, I think it was, what was his name? Minierberg, Scott Minierberg or something like that. He was talking about more FedEx-like guidance coming out, and we saw that last week. And honestly, remember Costco, Target, Walmart, but especially Target and Walmart with the guidance. Just watch out for those trends. Don't forget, be on the lookout. These guys, they could really scare the market, or trends can make people sell off discretionaries quick. But then also on the reverse, if Costco earnings are good, if Powell somehow finds a way to be bullish here, these might be very, very good for the upside. So we'll see what happens. But those are the main plays. As far as everything else, made a couple of plays today and also holding some. So let's actually start with the plays I made, and then we'll finish with what I'm holding. So as far as the trades that I made today, I started with those 15 shares to Take Two at 121.87. I'm down about like $48 on that. Then I made a day trade on Run, baby, Rumble. Maybe I'll see you there soon. That's what everybody's playing on. This is the YouTube competitor. I'm sure you've heard about it from the SPAC, but they are now finally de-SPAC. So a lot of good, a lot of bad comes with it, but there is definitely a lot of hype. It is finally post-SPAC. I said, let me trade it. It was going crazy there. I grabbed 250 shares literally 6 minutes after the bell at 13.32. It was a little expensive. I played the first move. It couldn't break out at 14, so I sold out. Only made like $100 off of it. Ended up rocketing. So congrats if you held. I'm probably going to come back into this, or at least hold it. It's not a long-term one just yet, but we talked about this one a lot. It was a very interesting one, and especially if it holds up tomorrow, keep your eyes on that. But got a nice day trade on that. I shorted the Apple, and then you'll notice I shorted another 100 shares of Apple right after. Then I bought it back. I lost like 2 cents per share, but I made a fat finger because I had a couple of futures today. And what happened with the Apple, I was playing the upside on a big ES. I bought it at 3902, and then it rocketed up. It was on that like final push at the end of the day, and I was up like $700 on the future, and I was like, oh my gosh, I went to click it. It was kind of like a panic, take my quick profits, because the pop was so big. I was literally up $700 in like 2 minutes, wanted to go sell it out. I accidentally hit short 100 shares of Apple, so got out of that, then closed it, only made made $200 on the ES, had to take the loss on there. So yeah, there was all of that, but also shorted a mini one. I had an issue earlier in the day. You can see this MSF. This was a short on the Swiss franc. Contract was expiring. I forgot to roll it over, so they closed me out of it, took an $800 loss, but they restricted my margin throughout the day on futures because of that, and they didn't want me to get delivered, so got that solved. It was a weird mess. If you saw it online, resolved pretty quickly, but there was a lot going on, and then finally I closed out the ZQ, the Fed futures trade. Like I was telling you, it seems like this meeting, it's already priced in. It's all about the next meetings moving forward, and that's somewhere I'm going to be looking to play here as we start moving forward. So I hope you're ready. But wait, no, I still got more. Wait, I'm still, no, I know. I was just, okay. Anyways, as far as what I'm holding though, here's the Apple down 42 bucks. There's also the MES. Again, I added to that. So I did that as the test. That's why I literally averaged into another one after I got my margin capability. So I was up 500 bucks on that, but I would have still been up by buying that second contract though. That one's clapping me. So we're down on that, but I'm going to hold that in the Powell. Adobe, I'm down 700 bucks. They got another downgrade today, but still riding that one out. Again, need some upside, but it's not helping me on the upside while holding the shorts, but hopefully that turns around. ARK kind of came back a little bit, but like I said, still been loving and riding with that one. The Google, I'm down 66 bucks, and then the Netflix, this one was interesting. We were up for like 15 bucks for a little bit today. Again, we were comparing it with the options. Again, still outperforming most of the options you could have bought, but we are down 50 bucks. Remember, this was the example play. Still riding in. Again, you're getting to see the most we were down today was 90 bucks. Most you're up was 15, but again, go compare it to any option that you could have bought on Friday at I think 1:11 Eastern, and just see how the prices have changed from there, and you could really compare them. But still holding that one, and then down 780 on the Tesla, and then I think the Take-Two again down 50 bucks. So there's all that. Really going to be watching those bank stocks, like I said. All the other plays we brought up, again, Apple, Costco, Walmart, Target, again, even the Tesla too. Ride out whatever we get, and then see, does anything with the bonds give us a signal coming into it? But Chad, just get ready. The 10 years at 3.5. It's time, baby. It's time, and it's a big event. Spreads and events, bro. You have an event coming, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to follow through, baby. I know you could put in the work. You ain't lazy, but don't get lazy at the last minute. Follow through. Come on, follow through. Future, paper trade, follow through. Follow through and finish it home, baby. Let's go. It's time. Don't let a fast one slip by. 100%. Dot the I's, cross the T's, and get ready. We're coming into the final quarter, Chad, and you made it. You made it. I can say welcome to the final quarter, and you made it, baby. So let's go. Bring the hype. 2 more days, and again, man, it's an event. So I hope you're ready, Chad, and God bless you. Thank you, and shout out to the positivity, and I'll see you in the morning. Peace out. Cut it out. Cut it. I feel like, what's his name? I don't show my face. Home improvement. Okay, bye.